I want to pose a question to you for this next session then. And the question is, who wins on cost, speed, decarbonization, and is truly better for consumers? Utility scale versus distributed energy. And whilst you think it through, we'll hear from some that I believe have an answer or think they do, and hopefully it won't get too fiery. We're going to welcome to the stage Vincent Gregoir, Principal at Junction Growth Investors, Phillip Twiddy, Head of Strategy and Transactions, Demand Side at LCP Delta, Matthew Plante, President at Voltus, and the moderator for this session is Gabriel, Managing Director and Co-founder of Prelude Ventures. Let's give them a round of applause and welcome them to the stage. Over to you.
Thank you. Good afternoon. Good afternoon, Bilbao. Come on, raise the energy a little bit in the room. Come on, folks. Yeah, thank you. Thank you. I was actually, as my colleagues get to the stage, I was thinking, to myself, we're moving from new models for grid infrastructure, planning for wind, solar, transmission, and storage to balance cost, reliability, and decarbonization. We're moving from that one to utility scale versus distributed energy, who wins on cost, speed, decarbonization, and is truly better for consumers. I was thinking, God, there's like a circus or a nightclub here in Bilbao who's wondering, where did all of our customers go? What awesome. No, I'm an energy geek, just like most of you in the audience. Really excited to be here talking about this stuff with this great group of people. I want to start off, we sort of had a couple of good conversations on the way to getting here. And we got to the conclusion, and I think we'll participate. You'll see the conversation, and you'll hopefully have a chance to participate. We came to the conclusion it is not an either or, right? This is not one or the other. Both of these things really matter. There are certainly trade-offs. There are certainly lots of considerations as you try and frame this, especially in this era of customer affordability. I think, I'm from the US. We've had elections changed by the cost of electricity. The US is a car culture. Plenty of elections have changed on the cost of gas. But in the last year, we've had multiple statewide elections, and now it's influencing national politics about the cost of electricity. That's a sea change shift in the United States, and I think the dynamics here are very similar. So that's one big thing to remember. And sometimes if there's trade-offs between decarbonization and cost, the answers that we come to today for political and consumer advocacy reasons might be different from the answers that we came to 2 or 3 years ago. The other thing that we talked about is the grid. When we talk about utility scale versus distributed, we have to remember that the grid is the thing. The grid is what enables everybody to have lights and hot coffee and air conditioners, if that's part of what you do every day, and electric vehicles and heat pumps as we grow demand, and of course data centers. The grid is the thing, and distributed versus utility scale is now what can we do to enhance the grid in some sense. But where we are today and where we get to tomorrow, it's still a very open question of what we do to get there. And it's important to note on the other side of that distributed assets, the things we're talking about as competition with utility scale assets, historically have been very underutilized, both from technology reasons as well as for regulatory reasons, how those assets are recognized as a resource for the grid and the grid operators. So let's dive into it. My name is Gabriel with Prelude Ventures. We invest in energy tech, climate tech, companies broadly. We've been doing a lot of electricity and grid operations and power generation for many years now. But I would like to ask each of my colleagues, Phillip, maybe you could start to give a brief introduction and maybe a short thesis on what is your answer to the question. And one last thing, if you think you have a burning question to add, please don't wait for the end when we throw it out to you. Raise your hand. I'll try and work you in. Please.
Thanks, Gabriel. So LCP Delta, we are an energy transition consultancy, and we span generation, storage, networks, demand side of the energy transition. We provide research to industry players, to investors, to OEMs. We help with things like customer propositions and how to extract the value of flexibility. We provide consultancy, and we provide support to investors and to those seeking investment. Gabriel, you mentioned it's not an either-or. It absolutely isn't an either-or. All of us want a secure, reliable, resilient, economic energy system. It allows us to drive cars. It allows us to turn on the heat pump and the air conditioner, etc. And if we look at the very smallest unit in that, myself, what I want is to be able to kind of go about my life easily and relatively cheaply. And that is completely consistent with the energy system. So driving an EV, relatively cheap. If I give it to somebody else to charge it for me, do it when it's cheap, when it suits you, as long as I can drive it, that is the cheapest way of me running my house. And easy. So it is absolutely together in lockstep. And across Europe, we're going to see roughly equal deployment of grid-scale renewables and consumer electrification.
Thank you. Vincent.
Hi everybody, I'm Vincent Gregoir, one of the co-founders of Junction. So we're a Belgian-based European growth fund, specifically for the energy transition. I call the utility scale versus distributed energy an age-old debate, which we continue to have as well in the fund. You'll see when I explain a bit more, we've invested on both sides. But also privately, in a previous life, there's quite a bit of knowledge in the team on both sides. I personally, with a previous fund, which is here as well, invested in Zonnen, which was one of the first residential storage companies, ended up building a VPP, so distributed energy play, so to speak. But one of my co-founders actually founded Restore, which was sold to Centrica. His original idea was actually utilizing other people's assets and distributed energy. Turns out there were none at the moment in the market, so he ended up actually optimizing large-scale, back then cold stores, but also, if possible, batteries. And so within the team, we have both views, and we recently announced our investment into Entrix, which is a large-scale battery optimizer. But they also have a joint venture with Enpal, called Flexa, which is then again the distributed energy side of things. So I think I fully conclude with what has been said before, that it's not an either or, it's an and actually, from our point of view as well as a growth investor.
We're going to find some disagreement, I promise. Matt, go ahead, Matthew.
Good afternoon, everyone. I'm Matt Plante. I'm the co-founder and president of Voltus. Voltus is a virtual power plant aggregator, and we have about 9 gigawatts of flexible load under management. I'm very grateful to be here today, partly because we are entering Europe after being North American-centric for our first 10 years. And I'm also quite grateful to Prelude and Gabriel, as they were our first investor back in 2017.
Well, we're grateful to you, Matt, and your team for doing such incredible work. Let's dive in. So, interestingly, I just heard that we have on an early investor in Sonnen, who and also another company where you wanted to aggregate and take advantage of distributed resources. And yet Sonnen actually had to eventually do it very successfully, but install batteries because they weren't there. You started your company in 2018. Sonnen started when?
Around 2010.
Around 2010. So let's give it about a decade. Now you can build a company, a really impressive, valuable company, on other people's resources. Whereas 10 years earlier, you had to deploy the resources. So how does that change the landscape? How does that change the possible value proposition and answer to this question?
I would say it gives you two complementary opportunities, actually. So you can see businesses, the vast majority of us probably don't have a fully electrified home. It's an expensive proposition generally.
Right.
And there are more and more solutions coming into the market that are allowing it to become attractive because it is economic. It doesn't require a huge capital outlay for every home, or every homeowner or person. And complementing that are the assets that are out there at the moment that either are able to be operated smartly or with some kind of adjustment can be. And you can then reduce the cost of that, or you can provide people with a revenue stream, no doubt what you're doing. But, so you have to, I wouldn't consider them kind of competing, because there's 10% of the market that's kind of leading the way, or consumers leading the way in terms of what they want to do, what they want to do in terms of electrification. There's another 90% that are going to follow, and then kind of follow, have to be persuaded, and then probably won't move. So you've got different opportunities, and there's different propositions needed for each of those.
Yeah, maybe to pick it on it, so when Sonnen originally started, I mean, the size of a battery was as large as a fridge, so people who bought it were early adopters, early movers. They wanted to, they were willing to pay quite some amount for it due to cost down. Of course, the price of a storage system has significantly decreased, but it's a customer segmentation exercise where you have early movers, but now we have this 90% mass market, and now the category has matured a lot, so you have financing solutions, so the assets became bankable as well. You've seen NPower, but Einkomma5, sort of a Sonnen spin-out, offering a finance solution to consumers, because in the end, a big part of the consumer doesn't care. They want an energy tariff, and they want peace of mind, and they don't care about which devices you install or how to optimize them, although it's very good for the energy system, and it's quite some interesting benefits to it.
And the challenge, I guess, that might come along with that is moving into, or possibly moving into a higher interest inflationary world, which is going to create challenges for some of the business models. But lots of the suppliers or providers that we're speaking with, it's an attractive proposition to have that recurring revenue stream and a touch point with the customer, because the first thing might be the EV, the next thing could be a heat pump or the air conditioning unit, etc. So it's more touch points with the customer, and that's beneficial for reducing the cost of that relationship.
Matt, where do you come out on this especially? Now, you're serving not residential customers, you're serving large businesses and manufacturers. So where do you come out on this kind of topic?
Yeah, speed to power has always been so important to us. And I'll start with a piece of data. There's about 35 gigawatts of front-of-the-meter utility scale storage in the United States. There's about 35 gigawatts of load flexibility. And what we're doing now is building upon the customer base that we've created over the last 10 years. We started with load flexibility. We've gotten to the point where grid operators have dispatch us every single day. And so our virtual power plant has been dispatched every single day since April 20th, 2024. We've built up this customer base at the same time that behind-the-meter battery storage costs have come significantly down. So that cost curve has come down at the same time that prices have gone up. So distribution costs, demand charges, they've all gone up. We're now at the point where finally behind-the-meter storage pencils out. The math finally maths. And so we're going to see a significant investment in behind-the-meter storage at commercial and industrial facilities over the next few years, which is something that we haven't seen. So that's very exciting.
So I just want, maybe even everybody sort of to think about this. Yeah, how many gigawatts, or is it public, do you actually manage? At
9 gigawatts.
So 9 gigawatts, that's not storage, right?
Correct.
That is 9 gigawatts of load that customers have agreed to hand management of that load to Voltus, to turn it down, and that load diminishment is now essentially duplicating a source of generation, right? Like that's for me at least, a mind-boggling number. Now we add in batteries, right? And now, you said something, 45 gigawatts in front of the meter batteries in the US?
35.
35, excuse me. So that's a fundamental shift in what existed 10 years, and especially like 15 years ago when you were trying to found Sonnen. So I'd love to hear, what is that going to do, for cost, right? We care a lot about cost here. What does that do for decarbonization? And I'm asking you, and then how do you think about investing against that thesis going forward? What are the right opportunities? And the last little twist I'll throw in is, I know from my own experience, when you look at what is the value of an incremental battery on the grid, when battery penetration is low, the incremental value is high. But eventually, and so, you can afford to pay a couple of $100 a kilowatt hour or something like that very readily to install that battery. By the time you get above 50% or 40% penetration, the value of that incremental next battery is much lower, and you probably you can afford to pay much less to monetize it. So, as we get higher penetration of batteries, what happens to some of those economic propositions, and do they continue to drive down cost for consumers and decarbonize the grid?
Yes. The
Yes, they do.
Yes.
All right, a good simple answer.
We will live in a world in which the grid is run entirely by renewables and storage.
No fusion, no nuclear. We don't need it.
I don't think so. Certainly my children will live in this world. And I want to make sure that one of the words that's missing in this discussion is reliable. So cost is important, decarbonization is important, speed is important, reliability is incredibly important. And I think about, okay, it doesn't matter so much whether it's utility scale or distributed. What matters is that it's affordable, reliable, and decarbed. Okay, so how? How do we actually deploy it? That's the important question in my mind, because of the 35 gigawatts of utility scale storage and front-of-the-meter storage in the US, it's all in 2 states. It's all in 2 states. It's all in California and in Texas. And to me, the interesting thing about that is that those states have nothing else in common. And how they got there are very different. And so I think it's really instructive to think about, how did they get there? What kind of policies did they put in place to encourage the deployment of 17 gigawatts each of utility scale storage? And so there's different ways to get there, but it's very important that we figure out how, what are the right policies, what are the right incentives so that we can actually do it.
Got it. So if you were here at the end of the last panel, Andrew was asking about, is it technology, is it policy, or is it business model innovation? And you're pointing a big finger at policy.
Yep.
Vincent, you were nodding along there. What do you have to add here, please?
So actually, as a growth investor, Junction was founded on the belief that actually most of the technology, 90% of the technology which is out there, is already in existence. So we're helping to scale that technology. So from that point of view, I agree. Regulation is a very big impact. When looking at it, geopolitically, there have been hiccups, let's say it like that, on a global scale, but fundamentally...
No hiccups.
Fundamentally, renewables continue to increase globally. So that means more intermittency, which means we need a solution. And I can give you an example. In the Netherlands, businesses cannot get connected anymore to the grid because there's too much intermittency and they can't manage the grid. So from that point of view, both utility scale and also distributed energy is very much needed. And next to other solutions, we also heard grid enhancing solutions in the previous panel. It's another area where we invest in. So from that point of view, we can see this continuing, this growth, and it's very much needed because we're definitely not there. Right? There's a lot of talk in Germany on big batteries, for example, but they all need to be connected, installed. So there's still a big push to come.
I want to come to you in a minute, Phillip, but I just want to ask a question of Matt and Vincent based on what just came. Do you think it is distributed batteries or large utility scale batteries that are going to have a real continued rapid growth over the next, say, 10 years versus what happened in the past 10? Quick and dirty answer, please.
It is both. And so
Come on.
it is,
One or the other.
it is both. The cost curve of behind the meter has come significantly down. And so we're going to deploy tons, gigawatts of distributed batteries. And also the PJMs and MISOs and other countries of the world are going to learn from what California and Texas did right. It's not an economic thing. The economics work in both cases.
Okay, Vincent?
Yeah, I tend to agree, but before actually coming on stage, we had a small discussion on what are big batteries, right? So a lot of batteries, large batteries, from my point of view, are also part of the distributed assets. Next to utility scale, you mentioned in the US, there's quite some large batteries, but so to speak, they're also distributed. So if I have to then choose a contrarian answer, I would probably say distributed.
Over large, centralized, very large. Phillip, do you have anything to add to that? Because I got a shift in topics if you're...
Yeah, I think what I would add to that, if you're looking at a consumer level, then where are you going to get the value? Or are you going to continue to get the value? And if you can do that with combined solar and battery storage, that gives you a better return, as it does in the commercial scale. So combine, and one of the reasons why we need this at all, whether it's about being able to flex assets, whether it's about distributed or central storage, etc., it's because it allows us to get to the grid that we want.
Yeah, well, a super important point, I think, in Germany, you learned some of these lessons. In California, we learned the following lesson. We had a really progressive tariff rate structure for encouraging rooftop solar. And we went on with it for a little too long. And now you can document that in California, about 6 or 8 cents per kilowatt hour that a homeowner pays for their electricity rate is because they're paying for somebody else's solar on their roof. So you can, it got it going, but it went a little too long. And now there's some really thoughtful and creative, both policy people and businesses who are thinking, how can we put batteries on those solar roofs, get those consumers to give up that highly attractive rate, and yet create value for those homeowners and for the other ratepayers as well. It's a really interesting opportunity with a lot of solar installed. There is an example, though, of a company that sort of came up with a residential customer value proposition, and it's in the UK. And so why did Octopus succeed in doing this, become a big profitable company, and serve many, many happy customers? Why did they succeed where we haven't seen these big, massive, at-scale success stories everywhere? Is it here in Europe and the UK that there's something different? Is it the UK alone? What are we missing? You want to start us off there? And if you have questions or something to add, please raise your hand.
So I'll answer your question about how did they succeed, and I would put that down to a business proposition, or a customer proposition, sorry. How do they make something simple and attractive and go beyond what the establishment had been offering? So before Octopus, people sold you electricity. Now Octopus can offer you electricity and a car, and they can lease that, and now and various other solutions for your home, and that allows Octopus to create revenue, more revenue, a greater share of the wallet. It reduces the cost of servicing that customer, because you're not just creating a relationship for the purpose of selling them electricity, and they created something attractive.
We had a good conversation about this earlier, so I'll throw on a little extra provocation as, again, come on folks, somebody raise a hand, but I'm coming to you in just a sec, thank you. But I said, wasn't it just a spark spread? Octopus recognized that there was a difference between sort of solar and battery and wind and the traditional generation sources, and took advantage of it with a very clever business model. And people said,
No. You're a venture capitalist.
Yep.
And so if someone asks you, what do you invest in? What's the first thing that you will say?
People.
People. And so I think this is a culture and a people issue. So we all know culture eats strategy for business, and Octopus Energy has an amazing culture. You walk in their office, everything is pink and purple. You can't forget for a second where you are, and their strategy about treating the customer right is deeply embedded in every single thing they do. The other thing is talent, and this is the huge change that happened in our industry over the last 10 or 15 years. The best and the brightest, let's face it, after Thomas Edison, went elsewhere, right? They went to big tech, and I think COVID helps change a lot of this. This industry is now attracting the best and the brightest because it's such an intractable problem. It's such a massive problem that we're trying to solve. It's finally attracting the best and the brightest. And so that's what's going to solve these problems.
Vincent, do you mind if I go to the audience before?
Go ahead.
Sir, somebody raised their hand. I'll repeat it for you.
I can speak loudly.
Awesome.
Perfect.
So I'm Stephen Lambert, also in venture capital with Capricorn in Belgium. Maybe stand up so you can see. I guess one question I sort of have is whether you put the battery in your house or in your office building or in your microgrid or on the grid. To me, it's more about who's pulling the trigger, right? Who's the one flexing? Is it me optimizing for my house or me optimizing for my industrial site? Or is it we're going to give away that control to the DSO or someone else in the utility chain that will actually pull the trigger and flexing it? To me, it's sort of like the jury is still out on who's going to keep control over the flexing. Right? Some people firmly believe you just optimize locally in your microgrid in your house and it'll solve the grid problem that way. Others are saying, no, you have to get paid to hand over control
Yep.
to some ultra grid scale that makes the decisions. I'd love to hear your opinions on, like, is it going one way or the other? And there, I don't think you can say both.
Yep.
It's sort of like it needs to end some.
Well, Vincent, why don't we go to you?
Yeah,
Great question, by the way. You preempted our next topic. Thank you.
Thanks for the question. Right before the panel, I actually shared, I recently had a very interesting conversation with somebody from Australia. So Australia is quite far in sort of terms ahead of other markets. And what the person was telling me is people who actually bought the assets themselves didn't want the other parties to utilize their assets and basically lose out on value they should have. And so his point of view is that mindset is shifting. Where he did agree is people who lease assets. So you just have an energy tariff, so to speak. There's a different mentality. They don't seem to care as much if another party optimizes the asset. So probably, the jury is still out there, also from my point of view, but probably it's going to be a mix in terms of who owns their own asset and wants to capture all the value themselves, and there will be software technology providers for that, or people under an NPAL or other, I would say, leasing formula, having the systems in the house and want somebody else to optimize it for them.
Stephen dared you not to say both, but you actually said both.
There's a company that we were talking about in the U.S. that's raised a large, hundreds of millions, if not billions of dollars to install batteries in people's homes behind the meter, base power. And their bet is that by providing this to the consumer, to the homeowner, that they can provide a service at no cost to the homeowner and then monetize the battery very attractively for themselves. I think it's a super interesting business proposition. And we're not investors. We didn't get in on the early stages where we do, but I'm really excited to see how that plays out. I think we're running out of time. Does anybody have a last word to add on that topic?
Just to reiterate it's an situation throughout Europe and most likely the world.
No. I wonder if it's not going to be like a situation where if the consumer, if the homeowner can get more value, or if the grid or the grid operator or the service provider can get more value, eventually that becomes a margin diminishment for the business operator, because if I'm offering you 30% of the value and you come by and offer them 40%, the people will switch. Lightning quick, I'm going to repeat what Andrew did. Which one? You get to invest in one and only one for the rest of your career: utility scale or distributed?
Utility.
Vincent?
I said it before, distributed.
Nice.
Distributed.
All right. Can we have a warm round of applause for our panelists? Thank you very much.
Thank you.